Ignition sequence start. 6, 5, 4, 3, 2, 1, 0. All engine running. Liftoff. We have a liftoff.
Founded in 2015 by Justus Parmar, Fortuna Investments is a private investment firm that develops long-term partnerships with change-making entrepreneurs in emerging industries. Fortuna specializes in venture capital investments and has raised over $500 million for more than 125 companies since its founding. My guest is Justus Parmar, the founder of Fortuna Investments. And Justus, thank you for being our guest today.
Pleasure to be here. Thanks, Tom.
Let's start out just by talking about Fortuna Investments. So basically, what industries do you invest in, and what are you looking for in terms of companies, founders, and products?
Sure. So we've, as you mentioned, we I founded the company in 2015. We've developed a name for ourselves, primarily in the battery technology and the lithium industry. Mm-hmm. So back in 2016 and 2017, when the electrification of the world was just beginning to take off, when Tesla and some of these amazing things were just beginning to really take off, we started founding and co-founding battery and lithium companies, some of which went to over $1 billion in valuation, and another of our portfolio companies was sold for $460 million about a year and a half ago. So we're extremely well versed in the metals and mining, clean technology industries. And so ironically, in the last 18 months, we've turned our direction and our sights into outer space and the new space economy. We believe this new space economy to be $1 trillion opportunity.
It does seem to be that way, and it seems like every time you turn around, at least it had been for a while, that every time you turned around, there was a new space company being founded, some of them with better foundations than others. But now the economic winds seem to be shifting a little bit in terms of interest rates to globalization. There's political polarization. How is all of this affecting the investing landscape in general and your company in particular?
So as it pertains to space, so we've been following the industry for 5 to 7 years. We were actually even offered rounds of financing into SpaceX in 2016. Unfortunately, we didn't pull the trigger on that particular investment. We're still kicking ourselves. But as you mentioned, there has been an influx of space startups, but we actually missed the SPAC boom and some of the overvaluations of a lot of these companies in 2020, 2021. So as new entrants in this new economy, we see tremendous value because we're not carrying a lot of the baggage from the past. So we're looking at this from a clean new perspective. And so when dissecting this, what I'm seeing is we've got technology being the furthest it's ever been in space, or the new space economy, and we've got valuations at almost all-time lows. So there represents inherent value there, in my humble opinion. That said, we're not going gangbusters and trying to do all sorts of crazy things and outstretching ourselves. We're being very methodical in our thought process and our selection process, much like a sniper would with a rifle, opposed to a machine gun type of approach. Right. Because the reality is, there's a lot of companies out there, unfortunately, that are in not so good shape. They're bleeding cash. They have no real pathway to profitability. And unfortunately for them, these, as you alluded to, these equity markets and these funding markets are completely closed on them. And in our opinion, I think they could stay shut for another year, maybe even up to 18 months. So there's going to be some real pain and bloodshed potentially for some of these companies that aren't able to get lean and start laying off some of their costs and things like that are bleeding cash. Because again, as we discussed a little bit earlier, long gone are those days where here's a lot of cash and grow at any costs. Those days, unfortunately, are not here.
So do you think that it might get back to that, or has that bandwagon gone down the road?
And so are you talking about venture capital or space or all of which? Or I guess which particular segment
in space in particular, because that's what we're focused on, yeah.
Sure. So Here's what I think. We at Fortuna, we have a long-term view in the industry. We love this industry. We think it's going to be, as I said, a $560 billion industry going to $1 trillion this decade. You've got geniuses like Elon Musk and SpaceX, $150 billion companies, some of the most valuable companies on planet Earth, that are really fortunately trailblazing and opening it up for other entrants and the economy as a whole. So with that backdrop, success is not going to be linear. It's not going to be straight up. Unfortunately, we've come off a boom time, so that it's going to contract. I'll break it down in the sense that, like, I think we're in the thick of winter. At some point in time, it is going to turn around. It'll be spring, whether that's late next year or the following year, to be determined, but it will start to thaw out and cool down. And then again, things will pick themselves up and we'll hit spring and things will start to grow. And then summer, the crops will be big. And then you're going to hit fall again, and people better harvest, because at some point in time, that cycle is going to repeat itself. And that cyclical aspect is as old as human beings. And so that's where we are. That's where we are in the cycle. And we at Fortuna are very, blessed and maybe calculated, where we avoided the bust or the contraction. And so we're looking at it from a clean lens, saying, hey, what's out there? What's amazing? What's groundbreaking technologies? And how can we invest and help and build to grow some of these amazing companies over the next 5 to 10 years?
Did anybody see the winter coming? I'm reminded of Game of Thrones. They all said winter is coming.
Not many did. And if they tell you, I think they're lying a little bit based upon everyone I've been speaking to. And so, no, I mean, look, and it's not 2020, but I mean, from the company aspect, the issuer aspect, what they should have seen coming is when maybe they didn't hear the musical chairs end, but when they started ratcheting up these rates and then the funding started drying up, I hope to God some of these companies started making really tough decisions where, let's stop hiring like crazy. Let's get a little bit leaner. Let's push things out. In my opinion, I like to use a lot of analogies because they're easy to understand.
Sure.
The idea is not to be, for swimming, the idea is not to be Michael Phelps right now. That's not what you're trying to do or what you should try and do. It's literally just treading water and keeping your head above water until you find that market where it's going to lift you up again, right? And so the idea is not to drown, because it's really treacherous. We're hitting a lot of rapids. Obviously, we're not out of this, but the good thing is, if you're able to make it out to the other side, your propensity and your probability to succeed goes up exponentially. So it's just navigating this really difficult time over the next, I'd say, 6 to 16 months coming up here.
So do you find this to be a particularly challenging time to invest, or are there opportunities, or is it a mixture of both?
It's absolutely a mixture of both. And again, I can only speak for ourselves. And so for us, it's been a little bit challenging in the sense that, we've got dry powder, we're ready to go. We've made one significant commitment for $50 million. We're looking for our second one. But we also have a portfolio of companies that we're founders and backers of, that are in other industries, not space, that inherently have caught this tailwind of just nasty closed markets. And so if you think about it, the IPO market, it's a good barometer. The IPO market has seen its worst 22 months since the dot-com days. And in the dot-com days, when that bubble blew up, the IPO market stayed closed for about 32 months. The global financial crisis in 2008 was the next huge kind of cataclysmic event. The IPO market stayed closed for 18 to 20 months. And so we're actually 22 months into this thing. I'd like to say I think things are getting a lot better immediately. I don't think it's going to be immediately. I think there's some really good things that have happened, which, effectively we've seen peak interest rates. So next year, the rates will be going down. You have a U.S. presidential year, which, generally speaking, you've got stability and you've got some goodies coming into the market. There's trillions of dollars sitting on the sidelines. There's M&A activity, but it's going to be a really, really choppy, in my opinion, year where the idea is not to be a hero. I think it's just to, navigate the market, make selective, intelligent, investments, not lose your shirt, and then kind of really push into it on the back half of next year or tail end of next year, where we think that the rising tide will float all boats. Because again, the market right now, it doesn't reward growth or growth at all costs. They're actually looking for profitability. And
Right.
so a lot of the stuff that we're talking about in the space industry is very far from profitability. So it's kind of a double whammy. And unfortunately, a lot of the players have been hurt. But like you said earlier, Tom, we're smart enough to know this isn't going to last forever. It'll turn around, we'll hit spring. And then again, if you're left standing, there's not that many space companies, and they will rise to the top. Elon will take SpaceX or Starlink public in 24, maybe 25. I'm sorry, likely 25, maybe 2026. It won't be next year. But when something like that happens, a big event like that happens, and I think that'll bring a lot of retail investing to the forefront. I personally think SpaceX will be a more valuable company than Tesla in the future. At some point in time in the future, it's the trajectory is there. He's on pace for $9 billion of revenue this year, maybe even up as high as 16 billion next year. He's absolutely crushing it with the Starlink business as well. So there's some really, really exciting things to kind of use our tailwinds to kind of go underneath and drag into. Yeah, absolutely.
When Mike and I founded this company, we talked about, and it was back during the exuberant period. And we talked a lot about the space and the commercial space industry being a lot like the .com industry in about the mid 80s, when everybody was setting up their new .com company, and there was a lot of exuberance. And there's a cycle of exuberance and then a fall, and then it starts to grow back more slowly. Is that a fair analogy to the .com comparison in the 80s?
I think so. What I will say is, I mean, if we're friends for long enough, which I hope and I think we will be, I think we'll look back at some period in time and just from the investment side where, you're going to, how you see some of these things where $1,000 in Amazon or $10,000 in Amazon's worth $10 million today, or $10,000 in Tesla in 2010 is worth $3 million today. That same thing's going to happen here in this commercial space, industry and economy in the next 10 to 20 years. So that trajectory is certainly there. It's just, as you said, we've gone from exuberance to contraction. It's like a hangover, right? If you drink a lot, if you pound 10 or 12 drinks, you have the best time ever, but your Sunday morning's not going to be great. And so there was a lot of stimulus going in. It's free money. All the .com good. I mean, the COVID, the CERB. I mean, there were so many things going on at that particular point in time. It inflated asset values through the roof. But the good news is rates will be coming down, and for growth, that's extremely good. That's exactly what we need.
I guess I was a little bit ahead of my time. Back in the mid 90s, I bought a little piece of what was then called Sirius satellite radio. And it didn't, I thought that was going to be my Coca-Cola. I thought it was going to split and grow and split and grow. And instead it tanked and got sucked up by Sirius. So, it's just legal gambling. That's all it boils down to.
Absolutely.
So Justus, tell me a little bit about yourself and how you got into investing.
Sure. And just to elaborate on the last question and the last point, in terms of, being the space industry and the similarities to early stage tech and the internet and things like that. I actually personally equate the new space economy, I equate SpaceX to the Google of the new space economy. So what you're going to see is internet pre-Google and internet post-Google. Mm-hmm. And so SpaceX is effectively that, in my opinion. They're already 90% of the launch market. They're bringing the cost. So, it used to be $30,000 a kilogram to get stuff into outer space. Elon's got that, cost down to about $3,000, give or take a kilogram. With Starship, we believe he's going to get it down to about $300 a kilogram. It's going to be so cheap not to take things into outer space. It's going to totally change their trajectory. And the way that the positioning currently is, SpaceX is in the middle of that. And so, again, I just think that's a good analogy of Elon and SpaceX being that Google of outer space. Yeah.
So tell me a little bit about yourself and how you got into investing.
So I was out of college. When I finished college, my first job was actually a stockbroker, and I ended up managing money. And so I was a licensed professional, money manager for, I guess, the first almost 15 years of my adult life or my professional career. And so I don't know if it picked me or I picked it, but we ended up dating, I guess. And yeah, once I got a taste of that, I couldn't turn back. And there was something about just the and again, I mean, for me, like I'm a very competitive guy. I like sports, I like winners, I like losers, and so, money management, you're in constant competition against yourself, against other people, against the index. You're trying to find the next best thing, and it was a very stimulating environment for me. And so once I had that kind of taste in my mouth, I kind of never looked back. And so I was in money management for almost 15 years, and at some really big investment banks like Macquarie, which is one of the largest investment banks in the world, top 10 investment bank. And so I kind of cut my teeth in those industries. And then when I had enough, I guess, personal financial money, I went out and I started my own firm, Fortuna, in 2015. And I figured instead of having partners and superiors and partners and things like that, I would go out and take a shot on myself. And it's worked out tremendously well.
But you do have employees. Tell me about your team.
I do. I've got world-class employees. I've got, I think, some of the smartest, most talented people who, we certainly could get our hands on or find. So I'm really blessed. We've got a world-class team. We've got, we've got research analysts. I've got CAs, CFAs. I've got a corporate lawyer. We've got, we've got a couple offices here. We've got an office here in Miami Beach, which I'm currently at. And then we've got an office in Los Angeles, California. I'm originally Canadian, so our firm actually started in Canada and Vancouver. So I've got an operation up in Canada as well. But yeah, no, I've got some really, really tremendous people that help to make me smarter in a certain way. They lift me up when I'm down. I lift them up, and vice versa. So it's a really, really good environment. We're probably just under 30 people, so it's a good manageable size. I've worked in 20, 30,000 employee firms in my career, which was great in a certain way, but it lost the family feel and the culture that I really adore. And so we're good. We punch way above our weight class. We like to have a good time. We work really hard, and we try and make an impact on the world.
I'm talking with Justus Parmar, founder of Fortuna Investments, on the Xterra podcast. Take a moment right now to click subscribe to be sure you don't miss any of our podcasts, or if you're watching on YouTube, any of the videos from Xterra, the Journal of Space Commerce. Justus, space is one of your target areas of investment, and you've recently invested in Starfighters in space. So tell us about them and why you think they were a good risk.
So I like Rick. I love Rick. Rick's the CEO of Starfighters Aerospace. Great guy, honest, salt of the earth. He's been at the John F. Kennedy Space Center at Cape Canaveral since 2009, so over 10 years. He's not a spring chicken in the sorts where he's lived life, which, some people, they like the young kids who are, 20 years old, they feel full of, call it, piss and vinegar and ambition and things like that. But I respect the fact that, Rick's a businessman who's lived life and had a lot of experience in life. And for me, that's invaluable, because sometimes and we've been on the wrong side of, sometimes you give younger people who are trying to figure it out a lot of money. And then as soon as they hit walls, they don't have the life experience to maybe overcome those things.
Right.
And so just the simple fact that, Rick's had a, profitable company for over a decade. He has employees, he's made payroll through booms and busts and things like that. And he's a good operator and navigator of business. So Rick, the CEO, is an unbelievable guy. He's got Tim and all sorts of other amazing people around them. But what they've sought our $50 million commitment for is they were doing a lot of research and development, pilot training. They've got a fleet of 9 F-104 fighter jets. So when you think about that, and no debt, clean company. And so he's been able to amass, almost an army or an air force of fighter jets that probably rival the country of Canada, where I'm originally from. And so that's really impressive for a private company and an individual to get their hands on these fighter jets that fly Mach 2. And so the reason that we think it's extremely compelling is because the reason that Elon's had a tremendous amount of success is because he's mastered the reusability, or the stage 1, right? His stage 1 comes up and down. And so Rick also has a stage 1 with this fighter jet that can launch every single day out of Cape Canaveral. And so he's restricted on maybe the size of his payloads because there's weight limitations. But when you start to dissect the launch market, everybody's going after the, Bezos, they're all going after the really, really large side of that market. So right. the small side of the market's actually neglected and kind of wide open in a certain way. So I think Rick has a real opportunity here to be a very bona fide player on the small, and I'm talking microsats, the small sats, nanosats, the small side of that ecosystem that's essentially wide open. So we're really excited about the opportunity to be working with Rick, and if he can execute with his launch license and his tests and things like that, I think there's a real need in the ecosystem for somebody like that.
And that small sat market is one of those that you do hear about a lot of new companies almost every day. There are a bunch of companies that are looking into making very small satellites that can do the things that big satellites were required to do not that many years ago.
It's crazy, the technology, right? And even like your iPhone, if you think
Sure.
about the size of, those old satellites where you get direct TV, you mentioned Sirius, like they were, there's the size of, a car, right? And so the processing power and the compute power, everything is getting smaller and smaller, and the technology is growing. So yeah, you're bang on. And that fits right in line with the Starfighters thesis, where things are getting smaller, and for us to be an additional launch player could fit in really nicely with their ecosystem. So yeah, really excited for them. Yeah.
So are you sticking to the civilian market, or are you looking at defense space contracts? What kind of is your focus right now?
Well, again, so we started with Rick and the Starfighters in the launch game. A lot of people actually don't like the launch game because you've got Elon, 90% of the market, right? And so
Sure.
A lot of people smartly don't want to, compete or have anything to do with anything that Elon's involved in from the investment side. But yeah, so we've started. We've got I think we have a niche in the launch game, gets our feet wet, gets our understanding who the players are and things like that. And so we've kind of grown a long way in our year and a half, understanding the industry. We like to do our homework. Defense is something that's very dear to me. I think that there's a huge need and opportunity whereby, as you know, and I'm not just talking about the current wars that are happening in, in the Middle East and Ukraine, but I'm just saying, from a defense perspective, I mean, this, the Biden administration is spending record amounts of, funding for the Space Force. If you think about the Space Force, it wasn't a democratic, institution that they put together. It was actually the previous administration.
Mm-hmm.
And the fact that a different party carried it over and actually increased spending, leads me to believe that this institution is going to be there for a long time. And so when you start breaking it down further, you look at what China's doing, and it's really, China's trying to eat the US's lunch. And so I think we all got to pitch in. We all got to do our part. We all got to really embrace, the folks in this industry and defense tech, because we're at a kind of a critical period of time here where, U.S. is currently in the pole position, but it might not be like that forever or even an extended period of time. So it's something where I think everybody can kind of get behind. I think us in America, we've got the most, I think intelligent people. We've got the best institutions. We have the best human capital. We have the current global currency. We've got so many amazing things at our back that maybe sometimes are overlooked with everybody bickering and fighting all the time. But again, defense and space tech is something that I think naturally synergistically fit together. And ironically, in the VC world, defense tech is actually one of the kind of prevailing themes of next year, where a lot of people are getting behind the Palantirs and some of these companies like that. Yeah.
You alluded to this a little bit earlier in the interview, but I wanted to come back to it because space is, for the most part, a very long-term kind of commitment on your money. The company comes up with an idea and they've got a lot of R&D to do, and they could be 2 years, 3 years, 5 years, 10 years before they actually start generating revenue. How do you work on evaluating things of that nature in the space industry to look for an investment that you think is going to pay off, maybe not necessarily in the short term?
Well, and thank you for bringing that up. I've been warned, I guess, coming into this industry. I mean, this industry is known to be one that turns billionaires into millionaires, and so we're navigating it cautiously. I don't have all the answers at this current moment, but again, I mean, we're relying on fundamental tenets of, companies that are game-changing companies that have good heads and good managements on their shoulders. Much like I run my family household, where I don't blow the budget on certain things, like they're making smart, intelligent decisions. They're spending the money wisely. They have novel causes. And then the $64,000 question is can they actually execute on their business, and is there a fit in that marketplace? And yeah, it's clearly a lot more difficult to navigate a nascent or a brand new industry like this, rather than, if we were to build a hotel, next to a different hotel, it'd, be a lot easier in a certain way. But for us, a lot of people tell us that it's extremely risky to be doing what you're doing. I actually think it's riskier not to be doing what we're doing, because this thing, it's here, it's starting to blow up. We're not doing it alone. You've got Elon, you've got Jeff, you've got all sorts of very, very brilliant Albert Einsteins of our generation leading the way. And, I'm very, very cautiously optimistic to the future. And my last point is people define risk in a certain way, but if we're able to make life-changing amounts of returns on potential kind of home run investments, there's something there. And I'm not saying go bet the farm and mortgage your house or your future on that, but there's something that's developing here that, everybody should have some element of exposure in some of these companies. Absolutely.
So do you have a particular investment thesis when it comes to the space industry?
Well, the thesis is still, we're still working it through. I don't want to pigeonhole ourselves into a certain segment in outer space. I found it all very fascinating. It changes frequently as well too, which is really one of the more amazing things. I'm so lucky to have the best job in the world in a certain way, where it's just like I learn something every single day. I'm speaking to all sorts of brilliant professors and scientists and individuals in the industry like yourself, Tom. And it's really, really cool and humbling in a certain way. But in terms of the actual I'll answer it this way. What I find extremely fascinating is the prospect of refueling in outer space, right? So Elon's done a tremendous job of getting the rockets up and bringing them down. But imagine a world where he doesn't have to bring them down to Earth, where it's actually using 70% of the cost and the fuel. And if there's a system or a mechanism or a series of such to actually refuel in outer space, to do different missions, to go further to Mars, or to have encampments on the moon and things like that. I think that's a natural progression. The tepidness is we really aim to have visibility on revenue and hopefully profitability and call it 5 to maybe 7 years, 10 on the very far outside, but just in that horizon. And so it's challenging because we know some of these, concepts, and, like solar energy, for example, like, we're big in clean tech here in America. We think it's one of the, back to security, it's one of the biggest risks of our time, not having energy independence and things like that. So, for me, solar makes a ton of sense in outer space, because you have installations that are not encumbered by clouds and the atmosphere. So you'll have 10,000 times more potency. And so that, like, in terms of fueling the Earth with clean energy, like, there's something there. Who's going to be able to figure that out or crack it, and when that's going to be? We'd like to find whoever that is and back and partner with people like that. But so those are some of those aspirations. I just think that are kind of natural fits to the current ecosystem. Aside from that, we think lower Earth orbit is currently being developed. So if there's good strong companies that have some level of revenue and hopefully millions of dollars of revenue, it doesn't have to be 100 million of revenue. It can be low millions of revenue. We're very interested in potentially working with and funding folks like that to take them to the next level. And so it's a really, really interesting ecosystem, and happy to hear your thoughts as well, Tom, on what you think. But yeah.
Just a couple of more questions. First of all, with a company, do companies come to you? And if they do, what should they bring to the table? How should they pitch you?
This is I sigh when you ask that question, and I just say, because it reminds me of almost like a job interview, and I never liked doing job interviews because there was always a certain level of embellishment. I guess you're always trying to put your best foot forward, and it might not be the true indication of who you truly are, the other 80% of the time. And so the pitches kind of resemble an aspect of that. So, what I would say is, I would just be truthful and just be yourself, be sincerely honest, be almost to a detriment. Just be genuine, be real, be raw. Have a conversation on what's working well, what's not working well, what the challenges are. And then again, because it's all going to come out in the woodwork anyways, so we may as well just be truthful and upfront about all those things, because what I've actually find, and again, I'm so blessed. We've got such a great team where, we've got, several folks on our team that are strictly allocated to new deals or onboarding or deal finding. And they take the brunt of most of the introductory calls, and they're very good at it, by the way. But one of the things that we find is it's always like a lot of window dressing, right? Amazing things, and then they bury the not so good things under the carpet. And so what I would encourage is, I'm not saying lead with all the crummy things about your business, but have a little bit more of a balance, and we can have a more meaningful discussion. And yeah.
Honesty is still always the best policy, isn't it?
You got it. Absolutely.
Just one thing more, and we ask this of all of our guests, Justus, and I want you to look out, if you might, over the next 10 to 15 years in space commerce and the role that you are going to play in it, and tell me what you see.
Ooh, great question. 10 to 15 years from now in space commerce. I think history is going to be kind to me and my firm. I think we are innovators, we are futurists, we are trendsetters in a certain way. We're venturing into the unknown. We're putting not only our time and our energy, but our capital and our network's capital behind these endeavors. We're going to swing the bat really big and really, really hard. I think our best days are ahead of us. I think that we're going to have the opportunity to fund and co-fund several companies that are going to be over $1 billion in value, potentially even more. And I think that, we can play a good part in that ecosystem, because the reality is that the Jeffs and the Elons and these guys, they can't do it alone, nor do they want to do it alone. They want other people to help this big endeavor that they've got a head start on. Mm-hmm. And so, Tom, that's people like yourself, and God bless you for the podcast and educating viewers and doing what you're doing. And that goes everything from, the parents teaching their young kids, hey, the space economy is a viable solution. You should look at that at maybe college. You can do things like this. And it's people like elder statesmen in this industry that have learned so much, who are hopefully passing that information down. It's capital allocators and company builders like myself, being in there, and maybe other folks in VC changing over and maybe accepting, the early days might be really choppy and we might lose before we win, right? So, but I guess what I'm saying is it's going to take a team approach, and we at Fortuna and myself personally, we're really happy at the prospects of changing the world and what it's going to look like in 10 to 15 years.
When I talk about the business, and I tell people every aspect of your life is touched in some way by space, and it is these days. There's just no question about it.
Absolutely. 100%.
Justus, thank you so much. I really appreciate your time.
Pleasure was mine. Thank you, Tom.
Justus Parmar is founder of Fortuna Investments. And that's going to do it for this edition of the Xterra podcast. You can subscribe to the audio version of the podcast on Spotify, Apple Podcasts, Google Podcasts, Audible, and many other popular podcasting platforms. Be sure to click on subscribe so you don't miss an episode of the podcast or any of our other videos. You can also get daily updates on space commerce by following the Journal of Space Commerce on Substack. And one thing more, be sure to connect with us on LinkedIn and follow us on X at XterraJSC. Until next time, I'm Tom Patton. Thanks for joining us.
I wanna go faster, faster. Hands in the air, we're gonna crash. Searching for the answers, like Galileo through his looking glass. For reason, a dreamer's eyes we gaze into, a sense of purpose known by few, like finding water on the moon.